What is going on, everybody? We're back again with another video, and in today's video I figured that I would do another breakdown of identifying market maker models, and in today's example it will be on euro pound for a market maker buy model. Okay, now before we get into the video, I want to tell you guys and show you a short clip about the recent prop firm that I have been trading on. So just to clarify, this is a market maker buy model that is not yet in the completion of taking out its original consolidation, and I would like to do that just so that you guys can understand like where I'm predicting price to go to before it actually happens live in time, rather than you guys just seeing it all in hindsight. I figure that would be much more beneficial. So here we have a naked chart on the euro pound for the weekly. And I want you guys to look at this and kind of reference as to my previous videos for internal and external range liquidity pools, as well as understanding premium and discount. So with the annotations that I added on from our previous naked chart, I have price retracing into an internal range liquidity pool that is in premium of the swing from this stop hunt high to this stop hunt low. So after price retraced into this internal range liquidity pool in premium, it displaced lower. And what did it do displacing lower? It took out this external range low and this external range low before it found a bottom to then start retracing into premium of this swing high to this swing low that I have marked off here. So using time frame alignment and what we want to acknowledge in regards to framing a market maker model, we want to have a weekly key level or a weekly PD array, and then we want to drop down to a 4-hour chart to identify the 4-hour market maker model off of that weekly key level or weekly PD array. And as you can see, we ran a weekly key level here, this external range low, as well as trading into this down close candle, which is an order block. So we have a external range liquidity pool and a weekly PD array that we are reacting off of to then push higher, reaching our drawn liquidity, which is premium or equilibrium of this weekly swing. So now that we identified our weekly key level and our external range liquidity pool, we drop down to our 4-hour chart to identify a 4-hour market maker buy model. So we have our weekly dealing range from this swing high to this swing low, and I have just only this annotation labeling the low, showing sell stop run. But before I move to the next slide, I want you guys to just look at the chart, and I think you could already notice and see how the market maker buy model is already forming before I show the annotations. Now here is a more zoomed in photo with annotations showing how we are identifying our market maker buy model. We have our sell stop run here that I labeled, and this would be our smart money reversal, our long-term low. After we have our smart money reversal, this is identified because price then displaces higher, giving us a shift in market structure. And after price shifts in market structure, we push up higher. We create a short-term low that gets violated here, creating an intermediate term low, trading into this 4-hour bullish fair value gap. So we have considered our first realistic entry, which is our low risk buy. So we have 4 stages to a market maker buy model. We have 1, the smart money reversal, 2, the low risk buy, 3, accumulation, and then 4, reaccumulation, the last energetic push, which is our silver bullet, towards our high or our original consolidation draw. And here is the accumulation stage of the market maker buy model, and just marking off premium and discount from this swing low, the intermediate term low that we made, to this swing high that ran the 4-hour external range. And after we run external range liquidity, what do? We retrace into internal range liquidity pools, which is this 4-hour bullish fair value gap in discount of this swing, and we had an energetic move off of it. So now that we have a 4-hour key level, that is accumulation phase of a 4-hour market maker buy model, this here reaction off of this 4-hour bullish fair value gap, we can frame a 15-minute market maker buy model off of a 4-hour key level. So we'll zoom in on price and how we could have played, or how we can play, this reaction off of our 4-hour key level. Okay, so what we have here is just the dry chart with no annotations off of that 4-hour accumulation, the internal range liquidity pool. So now we could frame a market maker buy model. Here are the annotations that I made that I shared with my Discord on the reaction of that 4-hour PD array. We have a sell stop run here that also tags this 15-minute bullish fair value gap, but after we had that sell stop run, we had price displace higher, creating a breaker off of that 4-hour bullish fair value gap. After we created the breaker, price retraced, reaching discount of this swing from this swing low to this swing high. And after we retraced into the breaker, we had an energetic move off of it, having price trade through this 15-minute bullish fair value gap, which is now an inversion gap, and trading through here, which can be used now as new accumulation. So I would assume that price accumulates overnight inside of this 15-minute bullish fair value gap to then continue and push price higher. And as you can see, if you measure the manipulation leg from this swing high to this swing low, 2 to 2.5 standard deviations lands at our 4-hour dealing range swing high. So what you guys can see here is I'm using time frame alignment, lining the weekly chart to trade into premium of that weekly dealing range, and I'm dropping down to a 4-hour chart to identify a 4-hour market maker buy model. And through the market maker buy model, as we progress towards our weekly draw on liquidity, I'm using a 4-hour key level, which is this 4-hour bullish fair value gap, to find a 15-minute market maker buy model as we progress to our higher time frame draw. So I'm not counter trend trading. I'm trying to trade with the flow of our higher time frame order flow so that I'm not on the wrong side of the market on my lower time frame executions. And I measured premium and discount from our 15-minute long-term low to our original consolidation 4-hour dealing range high. And what you want to be doing here is, like I said in previous videos, you want to be buying anything that is in discount of the dealing range and taking profits or selling anything that is in premium of the dealing range. So anything that is above equilibrium here, I will not be placing any long orders on, but I will be placing any long orders if anything drops below in discount, creating any sell stop runs or retagging any PD arrays resting down in discount. Now, this market maker buy model is not complete yet, and what I plan on doing here is posting the completed model, reaching our draw on liquidity, the original consolidation high of the 4-hour dealing range, and then hopefully our weekly equilibrium draw to complete our objective retracing from our weekly discount into premium before price continues lower on our higher time frames. So what I'll be doing, I'll post that on Twitter tomorrow because we do have pound CPI at 2 in the morning during London session. Now, if price wants to reverse away from me, that is completely fine and negate our market maker buy model on our higher time frame draw because it is CPI at 2 in the morning, so this could go south. But I want you guys to see what goes through my mind before the actual draw on liquidity is met rather than you just seeing hindsight. So I figured that it would be beneficial for me to upload this type of video, even if it's correct or if it's wrong, just so that you understand how I'm looking at price from top down, going from our weekly chart to our 4-hour chart, to our 15-minute to find our lower time frame executions. I'll kind of be doing anything to change up the ways as to how I upload videos and show you guys what I'm seeing in price and how I'm identifying everything from order flow down to executions. But everything that I've displayed here and showed you guys and talked about, it's all shout out to MMXM Trader. Always give him props because this is all based off of what he provided in his course, and that's what I have been portraying in all my trades, whether it's in my Discord. And if you are interested in that, I'll have a link in the bio. But Twitter as well, all my trade breakdowns stemmed from his teachings in his course, and also ICT as well, of course. But if you guys have any suggestions for future videos, please feel free to drop them in the comments below. I read everything. I respond to every single person's comments. So I appreciate you guys. Thank you for all the love and the support. But we'll see you guys again for our next upload next Wednesday.